Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is Kanishka Sarkar. In the next half an hour, we'll take you through all the stocks that are in either on the back of news flow or on the back of technicals. But first up, let's take stock of how the market is shaping up. Now remember, we had weak global cues, this global sell-off that we saw coming in, and we are facing the heat too. Nifty is currently down almost 75 odd points. We have recovered from the day's lows like 46 odd points, but nonetheless we are trading with cuts of 0.2% on the Nifty. Nifty Bank also is seeing sharper cuts. That's down almost 0.5%. 329 points down on Nifty Bank as well. But the most interesting part right now is the spike up that we are seeing in India VIX. If you can pull up the chart, India VIX is up 10.8%, which is a volatility index, and it's right now at 13.43, which means the volatility is very high in the market right now. Advanced decline ratio is clearly in the favor of declines today. Broader markets also seeing a decline today. Mid caps are trading down 0.7% and small caps taking a knock of 0.8% in the trading session. So sharper knock coming in as far as the broader markets are concerned. As far as the sectors are concerned, then all the sectoral are in the red, barring Nifty Auto and Nifty FMCG, which is absolutely flat right now, albeit very marginally in the green. But Nifty Metal is the one that's taking the sharpest knock. That's down 1.6%. Now remember, the government has relaxed those norms where there are chances of more metal imports into the country, which will perhaps lead to a bit of a pricing problem as far as the domestic market is concerned, and therefore Nifty Metal is taking a sharp knock. Hindalco is down 2.3% on the back of the fire incident that took place in Novelis, which contributes almost 60% of revenues for Hindalco. So Hindalco is seeing a sharp knock of 2% in the trading session today. But let's get started with all the stocks then, the other stocks that are in focus, and let's get on board Nagaraj Shetti, who's the Senior Technical Research Analyst, HDFC Securities, who's now joining us on the technicals. Hi Nagaraj, thank you so much for taking the time out and joining us today. So let's talk about the first stock of the day that is in focus, and that is Interglobe Aviation. Indigo. Now remember, Morgan Stanley has come out with a note on Interglobe Aviation. They're maintaining an overweight, and the target price that they have given is 6,668 rupees. That it's trading at the highest point of the day right now, trading with gains of 1.1%. So they feel that the management is reiterating high teens capacity growth for the second half of FY26 that is supported by seasonal demand and visibility on the market opportunities. The ex-fuel, ex-forex CASK expected to rise to low single digits due to the AOG unwind is slower than expected, and that is likely to remain in the 40s throughout FY26. They're mitigating the measures to meet the strong demand as well. International expansion is expected to be a key growth driver for Interglobe Aviation. On the back of that stock is up in a way 1.1% in a market like this.
All right, so that's Indigo for you, up more than 1% right now in a negative trade day otherwise. But let's also put the spotlight on M&M, which just had its investor day yesterday, and that day has triggered a wave of bullish calls from brokerages for M&M. And here's what they're saying. Morgan Stanley has an overweight call with the target price of 4,407 rupees. They're betting on 15 to 40% CAGR growth across key segments through FY30, with SUVs and LCVs expected to grow 8x over FY20 to 30. And the farm business would grow 3x. They've also highlighted strong EV momentum, premiumization in UVs, and 6 growth gems that could hit $2 billion in value by 2030. XUV launches like XEV9X EV platform, that's also strengthening the long-term view. Other than that, Goldman Sachs is also positive with a buy rating. They see value unlocking in growth gems such as LMM, Aerospace and Susten, with Aerospace alone sitting on $1.1 billion order book. So yes, a very positive call coming from Goldman Sachs as well. Citi too maintains a buy, highlighting the management's target of 8x revenue growth in SUVs and LCVs by 2030. So yes, very bullish calls coming from brokerages on M&M.
Absolutely. In fact, M&M is a top Nifty gainer on the back of that bullish calls that from the brokerage notes after those lofty targets by the management. Nagaraj, you have also picked out M&M on the charts. On the charts, what are the levels that we need to watch out for? It is actually hovering around its 52-week high. Is it likely to touch that? And what are the levels to see then?
Hi Ankita, good afternoon. Yes, rightly said, M&M has been in a strong uptrend over the last many months. We have seen higher tops and bottoms over the period of time. It has taken the support of immediate supports of around 10-week EMA and has on moved up. Overall chart pattern is looking very strong. I'm expecting more upside in the near term. So the next overhead resistance to be watched is around 3950, 4000 levels in the next 1 to 2 months.
All right, moving on from M&M on the charts to TCS, that's in focus on the back of the fact that they have partnered with TPG Terabyte to invest 18,000 crores in building AI data centers across India. So that's the news that's coming in for TCS. Another note by Morgan Stanley on TCS, where they're maintaining an overweight and the target price that they have said is 3,430 rupees. They feel that the $1 billion strategic equity investment by a global PE firm like Terabyte into TCS data center subsidiary validates the business potential. They also feel that TCS earlier had indicated a $6 to $7 billion investment for 1 gigabyte DC capacity and $2 billion of equity that has already been committed, which is a big positive again for the company. And the balance capex can be funded by optional debt equity structure. They also feel that overall in the near term sentiment remains positive for TCS, and the external validation strengthens the DC story as well. On the back of that, TCS is in focus right now, giving up those morning gains but nonetheless holding out in the green territory.
That's right. So that's TCS for you. But coming to you, Nagaraj, you've picked out GMR Airport for us, and yet again another stock that's holding out well in trade today, up about 1.5%. But in fact, in just a 1 month period, the stock has given 14% return. Do you think more upside is likely for this one?
Yeah, on the larger time frame, it has witnessed a decisive upside breakout of the downsloping trend line, which was the important trend line over the period of time. I think 95, 96 levels that acted as a strong resistance in the past, and the current decisive upside breakout indicates the more upside in the near term. The volume has shot up during the upside breakout, and the RSI is showing a positive indication. I am expecting 113, 114 levels, which is going to be the next resistance for the stock price in the near term.
All right, with that, it's time for a quick breather on the show. Don't go anywhere. After the break, we're getting you more buzzes. Stay tuned. Welcome back. You're tuning to Market Fatafat, where we are getting you all the buzzes in the trade. And now Nagaraj on the technicals has picked out Biocon for us. Nagaraj, tell us why Biocon. Just yesterday, we had a note by Citi that gave it a double downgrade. The stock saw a sell-off of almost 5% yesterday. Today, we do see some buying action coming in, buying on dips. But on the charts, what do you see for Biocon?
Yeah, after Biocon, after a sharp upside breakout, this stock has pulled down from the higher levels. The overall chart pattern is still looking positive. I'm expecting after the sharp upside breakout from 420-22 levels, the stock could find a good base around 385, 390 levels. I think this is going to be a good opportunity for the traders. And the overall chart pattern is still indicating that there is a possibility of some more upside from the lower levels from here onwards. And the stock could reach again 425, 430 levels, which is the next set of hurdle in the next 1 to 2 weeks.
All right, so that's Biocon for you, the technical levels to watch out for. But moving on, let's also put the spotlight on Hindalco, which is seeing its share fall today after reports of another fire that has taken place at its unit in Novelis unit plant last month. There was a major fire that took place in September, with a smaller while there was a smaller fire reported last month as well. Now, Novelis and its results were an overhang on Hindalco and its financial performance very recently on the back of these fires. Novelis in its earnings statement projected a cash flow hit between $550 million to $650 million and a loss of $100 million to $150 million on the EBITDA front. While Hindalco is anticipating a recovery of 70% to 80% of this amount through insurance, Novelis has mentioned that there are plans to restart operations at the affected plant by the end of December. So let's watch out for how and when the plant restarts. But yesterday, we are witnessing a fall of about 2% on the back of this latest fire incident.
All right, Novelis there declining 2% on the back of that fire incident. But coming to you, Nagaraj, you picked out Godrej Properties for us. Now, as far as Godrej Properties is concerned, that stock is also declining almost 1.5% in today's trading session. Though we have a positive news flow coming in that they have acquired 75 acres land in Nagpur, and they're eyeing a 755 revenue potential from the sale. But talk to us about the charts. How does the chart for Godrej Property look like to you?
Yes, Ankita, Godrej Properties is looking weak. I have a bearish view in this stock. What we can observe after a tremendous up move around 2300 levels, it struck a hurdle, and from there the decline has started. The recent bounce back has not sustained at the higher levels. At 200 DM, it witnessed again decline again. The overall chart pattern is looking weak, and even RSI is also showing more weakness in the near term. I think more declines will be there in the short term, and 2000 is going to be the immediate support for the stock price in the next couple of weeks.
All right, moving on from Godrej Properties, the next set of counters that are seeing some pressure, and that is the plastic pipe space. Nuvama has come out with a note. Now look at Astral, that's trading with cuts. They're maintaining a hold with a target price of 1,412. For Supreme, they are maintaining a hold, and the target price has been revised to 3,529. Phenolix, Prince, and Apollo, they're maintaining a reduced target. Reduced call, and also they've cut the target price. So basically they've downgraded the plastic pipe space with all these stocks. They feel that there is pricing pressure that's intensifying as far as the PVCs are concerned. The demand weakness, heavy competition, and new capabilities are impacting this sector heavily. Also, they feel that the regulatory setbacks, there's no ad plus BIS withdrawal leading to import surge, especially from China. That's also a negative for these companies. And the PVC pricing is falling fast. That's down rupees 6 per kilo in just 1.5 months. Another 3 to 4 rupees per kilo is likely to fall very, very soon. So that's a negative coming in for these companies. And in the back of that, Nuvama has cut the target price for these companies, and therefore this entire plastic pipe space is in focus today.
That's right. So that's about the plastic pipe space. But Nagaraj, you have picked out IndusInd Bank for us. The stock is, at the day's highest point right now, trading percent higher at this point. And in the month gone by, in the past 1 month, that is, it has given a return of more than 12.5%. Do you see more upside for IndusInd Bank?
Yeah, I'm expecting worst to be over at this point of time. Already bounced back from the lower levels, and IndusInd, the overall chart pattern of the IndusInd Bank is looking very positive. The higher tops and bottoms indicating strength building up from the lower levels, and what we can observe is a minor declines and a sharp bounce back in against to that decline. So overall chart pattern is looking positive. After a few sessions of decline, this stock has moved up, bounced back again after forming a higher bottom, and currently placed at the edge of breaking above the 200 EMA. The overall pointers are indicating that more upside for the stock price in the near term, and 900 is going to be the next hurdle to be watched in the next 1 or 2 weeks.
All right, that's IndusInd up and away 3% in today's trading session. But that was the last stock of the day. We are completely timed out in this edition of Market Fatafat. Nagaraj, thank you so much for taking the time out and joining us. But with that, a wrap. Kanishka and I will take your leave. Thank you so much for tuning in.